Hello and welcome to the video on trade simulation. Now in the previous video on entries and exits I talked about putting a trading system together to test that looks at stocks that cross over their upper Bollinger Band, as can be seen in the area here, going short and then covering when they cross below the lower Bollinger Band down here. In the entry and exit video you saw how to put together scans to detect those two conditions, and in this video we're going to talk about trade simulation and tying that all in to create a trading system. So as a quick review, here are the entries from the entry and exit video, all listed down here. The exits are all listed here. This is crossing below the lower Bollinger Band. And now we go into the trade simulation tab and we can set up the simulation in the simulation settings panel on the right hand side. So as I said, I wanted to be short the stock whenever it crosses above its upper band. I want to go short the next bar on the open. I want to use the exit event or the exit signal to exit the trade, and the exit signal is when the stock crosses below its lower Bollinger Band. And after the exit signal is hit, the next bar on open is the point where I want to exit that trade. I'm not going to use any stops for this simulation, and in portfolio rules I'm going to start with $10,000 in initial equity. I'm going to be investing $1,000 per trade, and I'm going to allow duplicates. And what that means is if a stock has triggered an entry and I've taken that entry and included that stock in my portfolio, and then that same stock triggers another entry, I'm also going to take that second entry and any subsequent entry too. And that's just an option that you can set on the portfolio rule settings over here. So once I have this all set up, all I have to do then is hit the run button, and very quickly I have a list of all of the trades over the time period that we're testing that have triggered a trade entry and a trade exit, and so each row in this list now is a trade, and the rows contain the symbol, the dates of entry and exit, the number of shares that were traded, the reason for exit, and exit event means that they exited because the stock crossed below its lower Bollinger Band, the exit signal, the profit and loss percent for that trade, the profit and loss value for that trade, and also the MFE and MAE, and that stands for maximum favorable excursion and maximum adverse excursion for that particular trade. Now, a very useful thing to be able to do here is to view each of these individual trades on a stock chart with the entry and exit point highlighted. And in order to do that, all I have to do is double click in one of the rows or one of the trades that I'm interested in. So I'll double click here, DHR, and I have now a pop-up chart, which I will show you, which has DHR containing the entry point and the exit point for that particular trade. With my keyboard I can then scroll up and down using the up arrow and the down arrow through the list of trades here, and all the while the chart is staying in sync with where I am highlighting the trade. So it's a very quick way to allow you to scroll through all of the trades. What might be more interesting is to be able to sort these trades in terms of their percentage profit and loss. The way to do that is any of the header rows here can be clicked on. If I click on profit and loss percent, it will sort it by profit and loss percent. I can click on it again and it will sort it in the opposite direction. So now I can see that the most profitable trade in this simulation was ODP, and if I click on ODP I can look at the charts and I can see how this ended up being a profitable trade. And what happened was the entry was triggered, the next day at the open the entry was taken, the trade went against us for a little bit, and then it started coming in our favor and it kept riding down the lower Bollinger Band until it crossed the lower Bollinger Band, triggered the exit, and we exited the trade for a nice profit. Now these trades are all sorted in terms of profit and loss. I can actually scroll through the most profitable trades right now because I'm going down from the most profitable to the least profitable. And if I do the reverse sort, which is always useful, highly recommended, you want to look at the trades that didn't work out so well and what happened to those. And here's the worst trade in the whole simulation. And as you can see, what happened with the worst trade was that it crossed above its upper Bollinger Band and it never crossed below the lower Bollinger Band until way over here, and by that time there'd already been a substantial price increase. So that was by far the worst trade, and we can scroll down and we can see the other bad trades in this simulation. And using this visual technique, you can then think of ways to try and minimize those occurrences and try and get a system that works for you. Now let's take a look at some of the other reports that are available in the trade simulation. The first report after the trade list is the next N bars report, and this is a very useful histogram which rolls up all of the trades in the simulation to show you exactly the profit and loss percentage and how many trades reached that particular profit and loss percentage. Now the way this works is the chart is split into two halves. There's a vertical blue line. Anything to the right of the vertical blue line is a percentage gainer. Anything to the left of the line is a percentage loser, or a losing trade. And the height of the green bars indicates how many stocks made that particular percentage gain or loss. You can see the actual number if you click on Show Values, but because the bucket size is only 1%, they are overlaid too tightly to be able to see clearly. So you can change the bucket size, and I'll change it over here to 4%. So now each bucket is a 4% bucket, and if I show values, for example, you can see that 791 stocks gained between 4 and 8%, because that's the bucket represented by this tall green bar here. On the bottom half of this view is something that looks like a stock chart, and each trade is now broken down into a single bar. If the bar is a tall green bar, it means it was a percentage gaining trade. If the bar is red and it's below this red line, it was a percentage losing trade. And the size of the favorable or adverse excursion is represented by the wick, or the shadow of the candle. You can scroll through this list to get a visual representation of the entire set of trades, and if you find one in particular that you're interested in, potentially there was a tall green bar or a tall red bar or something with a very large adverse excursion or favorable excursion, you can then investigate that further on the chart by double clicking. This particular trade here had a very large adverse excursion. Let me click on it. So I'll double click on this and it's popped up a chart in a new window. Let me just bring that into the video, and you can see exactly what happened in the life of this trade. Remember that we are going short, and so what happened here is that the stock went against us, the trade went against us, then it turned around and there was an exit triggered here. But that's the reason why you see a large wick in the bar here, because there was a large adverse excursion, and finally the trade closed out for a smaller loss. Moving on to the next report, the daily equity chart shows how the portfolio performed over the life of the trade simulation, and we were going from bottom left to upper right, so that looks quite nice. But we see that there was a fairly large drawdown around March through to May of 2008. The lower part of this chart shows the number of open positions that were held during that period of time. So we can see that there were 900 positions held open in May of 2008. Now that would require, because we're trading $1,000 per trade, $900,000 worth of equity in the account to trade it. So you can get a feel for whether or not this would be possible in your particular account. Now the reason that I'm allowing all of these trades to go through, even though I didn't set this up with my initial equity to have $900,000 worth of equity, is I want to get a feel for all of these trades without restricting it based on equity value of the portfolio. So I want to get a statistical summary of all of these trades, and then later I'll go back and refine it and restrict the number of trades and the number of open positions that I have. But first of all, I'm just trying to get a statistical idea of whether this particular trading strategy has an edge and can be tweaked into a trading system. The last report that's available is the summary report, and that summarizes all of the information we've seen in the other screens into a single spreadsheet. So we see the number of trades that were taken, winners, losers, percentage of winners, percentage of losers, and all other statistics that help traders decide whether or not a trading system is going to work for them. This report looks like an Excel report. It is actually an Excel report. You can open this up in Trade Simulation. You can say View Spreadsheet. This will open up a separate window with a separate spreadsheet viewer, and you can then go ahead and save this as an Excel report. So then you can open it up within Excel and once you're in Excel you can do your own calculations on that data too, so that can be quite handy. This report has all of the information we have seen previously. It has the entire trade list, it has the data behind the daily equity chart, so you can go and you see how much cash was needed. You can see the drawdowns on a daily basis, and we can also see the parameters that were used in order to run this simulation. So once you have this saved, you have essentially saved your entire simulation, and you can go back and review it at a later stage. That's it for the trade simulation tab. There's lots more to it, as you've probably gathered by looking at the number of options that are available, but in its simplest use we have just seen that it's easy to use and gives a really rich set of information to allow you to investigate particular trading systems. So thanks for watching.